Hello, crypto champions. In today's video, we will discuss a not-so-positive topic, crypto regulation in the UK. Why not? Because if they do something wrong with these laws and other countries follow suit, we will see widespread regulatory chaos, which will have a negative impact on us and the entire market. In the US, everything is already quite unstable and unclear due to the actions of the SEC. It would be more accurate to say opposition to the development of the crypto industry, and this could add fuel to the fire. But there is also good news for today. The German Bundesbank noted the usefulness and convenience of XRP. Let's take a closer look at it. Crypto in the UK plans to regulate industry with legislation are in motion. The cryptocurrency landscape in the United Kingdom is on the brink of transformation as the government gears up to introduce regulatory frameworks. This move is seen as a stepping stone towards mainstream adoption and a mechanism to foster a conducive environment for crypto enthusiasts and investors. We delve into the historical backdrop that has led to this decision, the key points in the proposed legislation, and the potential impacts on the crypto industry and its stakeholders. Cryptocurrencies have gradually found a footing in the UK, with a growing community of developers, investors, and blockchain startups. The allure of decentralized finance and the potential for high returns have significantly contributed to the crypto adoption curve. With the proliferation of crypto assets and related activities, the UK government has recognized the necessity for a regulatory framework to ensure consumer protection and maintain financial stability. The proposed regulations aim to provide clarity and confidence to both consumers and businesses engaged in crypto-related activities. The UK government has outlined ambitious plans to regulate crypto asset activities robustly. One of the focal points of the forthcoming legislation is the regulation of stablecoins, particularly for retail payments. The government also intends to extend the regulatory perimeter to cover other crypto assets and related activities over time. The proposed regulatory framework is expected to bring the rules governing the issuance, trading, and lending of crypto tokens closely in line with the existing financial regulatory regime. This alignment is anticipated to facilitate a safer and more structured environment for both individual and institutional participants in the crypto space. The UK aims to establish a comprehensive regulatory regime for the crypto industry, covering a broad spectrum of crypto assets and related activities. The forthcoming legislation, set to be presented in 2024, will empower the Financial Conduct Authority, FCA, with the requisite authority to oversee the crypto market, including stablecoins and other digital currencies. The emergence of stablecoins has garnered significant attention due to their potential to act as a means of payment while maintaining price stability. The UK government, recognizing this potential, has placed a particular focus on regulating stablecoins to ensure they adhere to equivalent standards as traditional payment methods. This will likely include requirements around capital, governance, and investor protection to mitigate risks associated with stablecoin use. The proposed legislation intends to extend the regulatory boundary beyond stablecoins to encompass a variety of crypto assets and associated activities. This includes exchanges, wallets, and other intermediaries involved in the crypto ecosystem. By broadening the regulatory scope, the UK aims to create a conducive environment for the growth and innovation of the crypto industry while ensuring a high level of consumer protection and financial stability. With the rise of crypto, concerns around money laundering and terrorist financing have also surfaced. The proposed legislation is expected to strengthen AML and CFT measures within the crypto space, aligning with international standards set by bodies such as the Financial Action Task Force. This will likely entail rigorous KYC and AML procedures for crypto service providers. The UK government's approach towards crypto regulation reflects a balance between fostering innovation and ensuring consumer protection. By providing a clear legal framework, the government aims to encourage responsible innovation within the crypto sector while mitigating the associated risks. The structured regulatory framework is expected to provide a clear pathway for crypto businesses, startups, and investors, thus fostering innovation. It's anticipated that a well-regulated environment will attract more institutional investments and global crypto enterprises to operate in the UK, further propelling the growth of the crypto ecosystem. The core of the regulatory framework is to provide robust consumer protection. By establishing clear rules and oversight mechanisms, consumers and investors can engage in crypto activities with a higher degree of confidence and security. This, in turn, is likely to enhance market integrity and trust in the crypto sector. The move towards regulating crypto in the UK marks a significant milestone in the evolution of the crypto industry. The proposed legislation embodies a comprehensive approach aiming to bridge the regulatory gap, while fostering a conducive environment for crypto stakeholders. As the UK steps forward into this new regulatory frontier, the global crypto community will be keenly watching the impacts and potential lessons to be gleaned. The ongoing developments in the UK's crypto regulatory framework underscore the growing acknowledgement of crypto's role in the modern financial landscape. In general, the news looks positive, but everything is not so clear because the experience of regulation in different countries, including the US, is mostly negative. I voiced my thoughts in the beginning. Let's see what comes out of this and hope for the best. In the meantime, to the next news. German central bank report highlights Ripple and XRP. A Deutsche Bundesbank report mentions Ripple and XRP as innovations in the payment landscape for service providers. A recent report published by Deutsche Bundesbank, Germany's central bank, has highlighted Ripple's potential to disrupt the financial landscape. Released in July, the report broadly discusses innovation in the global financial system, noting, among other things, how the rise of distributed ledger technology, DLT, and blockchain reduces friction for cross-border transfers. The Deutsche Bundesbank report cites Ripple as an example in a section discussing DLT-based money forms and infrastructure. In an apparent allusion to RippleNet, which Ripple recently rebranded as Ripple Payments, the central bank report acknowledged the efficiency at which the network brings together payment service providers. Precisely, the report cites Ripple Payments' ability to provide a recourse to bilateral credit relationships. Using its on-demand liquidity (ODL) solution, Ripple extends credit to customers, allowing them to move funds without pre-funding as in the traditional finance world. The Deutsche Bundesbank article also mentions that customers may use XRP on the network. However, it acknowledges that the use of the cryptocurrency may entail legal, counterparty, and exchange rate risks. The report explained that Ripple's ongoing lawsuit with the United States Securities Regulator and XRP's volatile nature makes it less ideal for certain payment use cases. Banks acknowledges Ripple's global payments solution. The latest development follows a pattern of praise for Ripple's innovation in the payment field by leading banks globally. In October, the Nigerian central bank cited Ripple in a report exploring CBDC and global payments. Similarly, in separate reports, the Bank of America and Deutsche Bank lauded Ripple as a solution to frictions facing global remittances. While the Bank of America edition focuses on payment innovation in the Asia-Pacific, Deutsche Bank's report explains how XRP provides the bridge for moving assets on the RippleNet. The foregoing acknowledgments evidently underline the relevance of Ripple's payment solution. It also hints at the potential for additional banking partnerships with a view to promoting the widespread adoption of Ripple's products. The recent Deutsche Bundesbank report that talks about Ripple and XRP is quite significant in the context of the evolving financial landscape. Ripple, with its RippleNet platform, is essentially carving out a niche in the traditional financial ecosystem. Of particular note in the report is Ripple's ability to optimize cross-border transactions using DLT. It's like watching a complex cryptographic puzzle being solved more efficiently than ever before. The aspect of Ripple providing recourse to bilateral credit relationships and extending credit through an ODL solution is revolutionary. Traditionally, cross-border payments have involved a myriad of financial intermediaries resembling a complex maze. Ripple's approach, on the other hand, resembles a direct path through this maze, reducing the need for pre-funding and reducing transaction time and cost. However, the report cannot fail to mention the legal, counterparty, and exchange rate risks associated with the use of XRP. These concerns reflect the challenges inherent in cryptocurrencies where security and stability are paramount. The ongoing legal battle with the SEC and the volatility of XRP are significant factors that may hinder the wider adoption of Ripple in certain payment scenarios. In conclusion, the recognition that Ripple is receiving from global banks further highlights its potential. Banks like Bank of America and Deutsche Bank recognizing Ripple's role in solving the global remittance problem is an important indicator of its growing influence and potential for additional banking partnerships. This news sounds better than the last one, doesn't it? Anyway, that's all the news I have for today. Let's move on to the market review. First, let's take a look at Bitcoin. 4-hour time frame, it bounced off the lower imbalance boundary, broke through the support at 41,927, and went down to test the level the last squeeze reached. That's $40,182. From this level, we see a rebound to the previous support, which became a resistance. It was not possible to consolidate above, and here again, we can see the correction. To go up, we need to consolidate above 41,927. The dominance has slipped quite a bit to 53%, which allows altcoins to show good growth even with the fall of Bitcoin. Now the situation on XRP. Ripple draws a very similar structure to Bitcoin. Unfortunately, it is more dependent on Bitcoin than the others, and its capitalization of 30 billion gives a lot of weight. It is very massive, and we will not see any cannon shots from it until Bitcoin starts to grow. For now, I can only give you the level that has already annoyed everyone. It is 0.6204. We need to break it and consolidate above it. While other alts are shooting, we are waiting. We are waiting for BTC to grow. If you want, open a position from the current ones, but then you will have to sit in it. I would wait for consolidation. That's all for now. Don't jump in on the highs, and only then will everything work out perfectly. Today we discussed crypto regulation in the UK, approving nods from the Bundesbank towards Ripple and XRP, and looked at the local market situation. Do you think Europe will make a bunch of mistakes like the SEC, or will things go smoother for them? What consequences for crypto will these laws bring? Share your thoughts in the comments. See you in the next videos.